Jacob here. Today we're looking at the company Crocs in the textile, apparel, and luxury goods industry. They do the shoes that many people wear and absolutely love. I feel like you either love it or hate it. I've met very few people that don't really care about it. But revenue was declining in the middle of the 2010s, but then has been going up very quickly post 2018, double-digit returns with earnings per share not only in the positive, which it wasn't from 2014 to 2018, but acceleratingly quick, with returns on invested capital in the low 20% on the bottom end of the last 5 years. So very impressive increases there, with gross margin jumping from 49 to 55%. All right, so very impressive on the margin side, the revenue growth side, return on invested capital side. 149 million cash on hand, 23 million short-term debt, 1.6 billion long-term debt. Looks like they made an acquisition last year, I presume. And they did. So $2 billion in acquisition, largely funded by a little bit from cash from operations and then quite a bit of debt. But they have been doing a great job of paying that debt down, so they're not just sticking with a lot of debt. I'm comfortable with that. Their use of cash flow is a little bit obscured due to the fact that they've been this big acquisition here, but buying back some debt, so that's a positive in the fact of, you don't want companies just sitting on debt and just refinancing them all the time. They've been buying back quite a bit of shares in 2021. They bought back a huge amount. Let's see if that was at a peak. So in 2021, I guess it depends when they bought it, but if it was over here at the peak, that probably wasn't the best return on that money invested. But management sometimes can be good at what they do, which is create Crocs, create beautiful shoes to some people that are comfortable and everything, but they might not be the best capital allocators, and that's possibly what we're seeing here. They not a lot of reinvestment back in them, or a little bit of reinvestment back in themselves, which you see from capital expenditures going up quite a bit. So I do take that back. They have been reinvesting back in themselves. And then outside of this one acquisition, it's really just buying back shares at this point. So let's start making some assumptions here. I don't think we need to go too crazy into it. I think that I'll probably have less growth than some other people. I think that I'm a little bit skeptical at them keeping these high rates of increases in revenue due to the fact that, 2015, 2016, there really wasn't anything going on. It was just low demand. So I think you're going to have some ups and downs here. I don't think they've necessarily created a moat or anything around the shoes. I do think that a lot of people do love it. So there is that. And I think I know someone with like 20 pairs of Crocs, which to me just doesn't make any sense. But, beside the point, to each their own. I think 5% seems pretty reasonable to me. I don't think they're reinvesting a whole lot to where they deserve a really excessive premium. And then margins, I question whether they can keep these margins up. So let me do a pretty big range here. Share change. So they're buying back a little bit of shares, but 1% of shares would be about 70 million. With their stock-based compensation, you're looking at about 100. So I think I'm pretty comfortable with 1% share change repurchases. The rest of the money going back to reinvesting back into themselves and then making acquisitions that hopefully make sense to them. And get to a price that needs to fall 37% before you get the return we're looking for here. This is a company that I think a lot of people enjoy. A lot of people like their shoe products, but I think that it's definitely interesting that you have a company that so many people can love while so many people hate at the same time. It's just people's opinions, But I guess when it comes to marketing, any opinion doesn't matter because you're still spreading word about it. But I hope you enjoyed the video and have a great rest of your day.